Thank you. Good evening, everyone. Welcome once again to the live virtual classes of ICAI. Today, we are completing our topic in cost and management accounting. So, we have taken one session on this, but it's been quite a few days. So, let me just give a quick review of whatever we have understood from joint and byproducts so far. We were doing this question. A company process a raw material in its department one to produce three products with A, B, and X. At the same split off stage, during a period, 1,80,000 kgs of raw material was processed in Department 1 at a total cost of 12,88,000. So the whole chapter or the concept of joint cost is to allocate the joint costs amongst various joint products or main product and byproducts. So that is what we are supposed to be doing in this chapter, majorly. So how joint costs are to be allocated amongst joint products or joint and byproduct or main and byproduct. You can have two, three joint products. You can have one joint product and one byproduct. You can have two joint products, one byproduct. You can have one main product and one byproduct, any combination. So the whole question is, whatever the costs you have incurred till the products get separated. So it's like you start working on a raw material and up to a point when you are working, you are incurring costs. And after some point, they get split up. So whatever the costs you have incurred till this point, these are to be allocated amongst the different products which emerge. Now, this joint cost may also be called as pre-separation cost as well. So you can call them joint cost or pre-separation cost. So in this particular question, the joint costs are 12,88,000. And we have three joint products, A, B, and X. This process is conducted in Department 1. So 1,80,000 kgs of raw material was input here, from which you have three products A, B, and X. And a total joint cost of rupees 12,88,000 has been incurred so far. Now the output of A, B, and X physical measurement is 18,000, 10,000, and 54,000. Okay. So one of the methods of allocating the joint cost was physical measurement method. Minu, I'll try that you get a feel of whatever I'm saying. Uh, I'll try to repeat it in Hindi also to some extent. थोड़ा सा हिंदी में बता दूंगी, but let me first explain it because we have many students from South India as well. So 12,88,000 is the total joint cost. Is joint cost ko we have to divide between A, B, and X. Now, how much kgs was introduced in the process? 1,80,000 kgs, whereas the output जो है ABX की, that is 18 plus 10 plus 54. So you can see it does not total to 1,80,000 kgs, which is an indication that there must be substantial loss in the process. So this is 64 and 82,000 kgs only. So 98,000 kgs is lost. A and B, they are then further processed in Department 2. So this, you process it further in Department 2. And then you incur a cost of 1,80,000 and 1,50,000. So the cost of incurring processing product A and product B is further 1,80,000 and 1,50,000. Right? So these are called as post-separation cost. post separation cost. इनको post separation cost कहते हैं. X was processed in department 3, and for X we have incurred a post separation cost of 1,08,000. So there is no waste in the further processing. And that means exactly 18,000, 10,000, and 54,000 kgs of A, B, and X were processed. That means subsequent process, yeah, after split off, whatever the process we have incurred, in that there is absolutely no loss. However, if you look at the sales value, A is sold for 17,000 kgs. This implies that there is a closing stock of 1,000 kgs. B is sold for 5,000 kgs. So B should be 10,000. So there is a closing stock of another 5,000 kgs. And X was 54,000, but X sold is 44,000. So there is another closing stock of 10,000 in X. So this is the sales value of 17,000 units, 5,000 kgs, and 44,000 kgs, which means entire production is not sold. There is no opening stock. And if these products were sold at split off point, the selling prices would have been 50, 40, and 10. So in this particular question, if we had wanted to sell A, B, and X just here itself, okay, not after further processing, if you would have sold them here itself, they would have fetched you 50, 40, and 10 rupee per kg. So we have to prepare a statement showing the apportionment of joint cost to ABX. Method of apportionment is given. We have seen in the previous session that there are multiple methods. One is physical measurement. So what do we do in physical measurement? This joint cost of 12,88,000 could have been shared between A, B, and X in the ratio of 18:10:54. But as we see, there is a substantial process loss of 98,000 kgs. We don't know which particular product entailed more losses or what. So this would not be the appropriate method. The second method would have been net realizable value, NRV. So when you use NRV, what do? We calculate the selling price of the sales value of all the products. From the sales values, we subtract selling expenses if they are known. And also we subtract the post-separation expenses, which generally are known. These two may be missing, but post-separation expenses are given. Like here, 180, 150, and 108 is clearly given. However, there is no indication as to profit or selling expense. So whatever the information we have, we will try to make the best use of that. In that sense, it means no profit will be subtracted in this case, no selling expenses will be subtracted in this case, only post-separation costs will be subtracted. And then whatever the total you get, if it is exactly equal to 1288, your joint costs are apportioned. But if it is less than or more than that, generally it could be more, then that means this is the ratio in which the joint costs should be allocated. But however, in this question, you cannot allocate 17, you cannot use the base as 17, 5, and 44. So we have to use, if 18,000 would have been sold, what would have been the sales value? So sales value for 18,000, 10,000, and 54,000 thousand should be taken, right? Not of 17, 5,000, and 44,000. So the first step to find out the sales value after split off point, after doing cross separation cost, would be to find out the cost per kg, the selling price per kg, which you can easily find here, 12,24,000 divided by 17,000. So that will give you the selling price. You can use your calculator simultaneously to keep doing the calculations. 12,24,000 divided by 17,000. It gives you 72 rupee per kg. Then 5,250 divided by 5,000. It's 50 rupee per kg. And 7,92,000 divided by 44,000. So it's 18 rupee per kg. So if we take the sales value, we will take 18,000 into 72, 5,000 into 10,000 into 50, and 54,000 into 18. From there, we will subtract the post-separation expenses of 180, 150, and 1,08,000. So that would be the net realizable value. Another method is contribution margin method, which is generally applicable when you have fixed and variable cost separately mentioned. But then one method is market value. So market value after split off and after doing the post separation expenses, or market value at split off point. So in this question, if you use the market value after split off, we would have used 18,000 into 72, 10,000 into 50, and 54,000 into 18. But that doesn't make sense because all three have different post separation costs. So market price at split off is also possible here because we have the values that if A, B, and X were not further processed, अगर उनको further process नहीं करते, as it is sell करते, if they were sold as it is, so A would have given us 18,000 into 50, B would have given us 10,000 into 40, and C would have given us 54,000 into 10. So that would have been another method, which is more appropriate, particularly when the selling price at split off point is specifically mentioned 50, 40, and 10. So as the question is not talking about any of the methods here, you could go by net realizable value or you could go by sell market value at split off point. So the first question is prepare a statement showing the apportionment of joint cost to ABX. We can use any. Remember in the last session, I had solved it using net realizable value. So you can see here 18,000, further processing cost 180, total kgs sold 18,000, produced 18, sold 17, 10,000, further processing cost 150, and 10,000 kgs produced, sold 5,000, 54,000 kgs, further processing cost 1,08,000, sold 44,000. So first we must calculate the selling price, so which we had calculated 72, 50, and 18 by dividing the sales value by number of kgs sold. After that, we follow the net realizable value. So the sales value of entire quantity, not keeping the closing stocks. 18,000 into 72, 10,000 into 50, 54,000 into 80. So our sales value would have been 27,68,000. Subtract the post separation expenses, 1,80,000, 1,50,000, and 1,08,000. So you have a total of 23,30,000. So your 1288 could be allocated in this ratio: 1116, 3500, and 864, so on. Okay. So this is the ratio in which the joint cost could have been allocated, and then you could have found the cost per kg also by dividing the whatever the joint costs come out to be 616,913 divided by 18,000 kgs. So now we know what is the pre-separation cost and what is the post-separation cost. So total cost of product A would be 34 plus 10, 44 subtracted from 72. If we follow the method of allocation of joint cost, using market value at split off point, units or kgs, this is 18,000, this is 10,000, and this is 54,000. Selling price or market price at split off point, it was 50, 40, and 10. Sales value at split off point, 9 lakhs, 4 lakh, and 5 lakh 40,000. Total is 18 lakhs 40,000. Share in joint cost. So the joint cost will be appropriated in the ratio of this. So it will come out to be 9 lakh divided by 18 lakh 40,000 multiplied by 12 lakh 88,000. Right? So 1288 was the joint cost. So now we are using market value at split off point. Now your answer would be a little different from what we got previously. 9 lakh divide these. All different methods will give you different answers, not the same. So this comes out to be 6 lakh 30,000. Two lakh 80,000 and 3 lakh 78,000. You can verify that the total should be again 12 lakh 88,000. So 630 plus 280, 910 and 12 lakh 88,000. Now what is the cost per unit up to split off point, which was coming out to be 34.27 here. Here it will come out to be 7 for product X, 28 for product B, and 6 lakh 30,000 divided by 18,000, 35 for product A. Now, there is no specific mention in the question that which method you should follow. But however, when you look at the answers, you can see that the you are getting exactly round off figures, not here, but when you are following the market value at split off point. So if you have time in the exam, you can always choose your option basis this. When there is both 2 or 3 methods are equally good, you can go by those methods which are giving you exactly round figures. Right? So 35, 28, and 7. So we have done the first question part. Prepare a statement showing the apportionment of joint cost to ABX. We have done it using 2 methods, NRV and also the market value at split off point. So generally when market value at split off point is given, you can follow this method. Second, present a statement showing the cost per kg of each product, indicating joint cost and further processing cost. So now if I prepare the second statement, Pooja, what is 6 lakh 44,000? Okay, 6 lakh 30, I think is the correct answer. Just verify your answers. The next is preparing a statement of cost per kg. So this is statement showing cost per kg of each product. So your products are once again A, B, X. Joint cost per kg, we have already calculated 35, 7, and 28. you could have taken these figures in the next statement, and 6,30,000 divide by 18,000, 2,80,000 divide by 10,000, and 3,78,000 divide by 54,000. So share in joint cost comes out to be 630, 280, and 378, which makes the cost per unit as 35, 28, and 7. Yes, 9 lakh divided by 18 lakh could be total 1,000. To this calculation, the sales value is not 18 lakh. Otherwise, it is exactly 50%, no? So 9 plus 4, 13, 13 plus 5, 40, 18 lakh 40,000. So 9 lakh divided by 18 lakh 40,000 into 12 lakh 88,000 joint cost. I'll check again. So it's 6 lakh 30,000. Okay. I hope you would have made the correction now. It's not 644, it is 6 lakh 30,000, Pooja. So this is how you have found the share in joint cost, 35, 28, and 7. And then you knew that what are the post separations cost, 180, 150, and 1 lakh 8,000. Post separation cost per kg. This is 10. 1,50,000 divide by 10,000. This is 15. And 1,08,000 divide by 54,000. So this is 2. So total cost per kg, 45 rupee per kg. 35 plus 10. 28 plus 15, 43. And 7 and 2, 9. So this is the cost per kg. 45, 43, and 9. And you have seen that this is sold for 72, this is sold for 50, and this is for 72, 50, and 18. Third statement, prepare statement showing the product wise and total profit for the period. So now that you have found the cost per unit, you can also find the total profit for the period. So 72 is the selling price, 50 is the selling price, 18 is the selling price, and you have also found the statement showing profit product wise and total. So once again, A, B, X, and total. Units sold 17,000, 5,000, and 44,000. You can take the total here because all the units are expressed in kgs. Selling price per kg. So this was sold for 72. This is sold for 50. And the third one is sold for 18. Total sales value 17,000 into 72, which is given in the question. So sales values are given 12,24,000, 2,50,000, and 44,000 into 18, 7,92,000. Total is 22,66,000. Cost for each product. So 17,000 multiplied by this, you can pick up from this figure 45, 43, and 9. So this will give you the total cost 17,000 into 45. This is 7,65,000. 5,000 into 43. This is 2,15,000. And 44,000 into 9. 3,96,000. So your total cost would be 3,96,000 plus 2,15,000 plus 7,65,000. And you remember the closing stocks in this question, 13,76,000. Profit from product A, you have a profit of 12,24,000 minus 7,65,000. मीनू आई होप आपको समझ आ गया होगा, क्लियर होगा. 2,50,000 minus 2,15,000, 35,000. 7,92,000 minus 3,96,000 is 3,96,000 exactly. So the total profit is 396. And you can see that product B is giving very little profit, and we will also see the reason why. So the total profit is only 8,90,000. Right? So this is your fourth part of the question, statement showing profit product wise as well as total profit for the period. You have to prepare a fourth statement where you are showing through supporting calculations as to whether any or all of the products should be further processed or not. So this calculation, you will get it simply from here. We have seen that the post separation cost. Now we have seen, I'll show it here only. A, B, and C. They are sold for 50, 40, and 10 if you sell them as it is. But if you sell them after further processing, then they are sold for 72, 50, and 18. So how much extra you are getting per unit? Here you are getting 22 rupees per unit. Here you are getting 10 rupees per unit extra. And here you are getting 8 rupees per kg extra. This is your incremental revenue, right? So if you process the product further and then sell it, so you are able to generate 22 rupee per kg extra for A, 10 rupee per kg for B, and 8 rupee for X. तो अगर हम इनको एज इट इज सेल करते तो 50, 40 या 10 में बिकते, लेकिन हमने इनको फर्दर प्रोसेस करके सेल किया है, तो ये एक्स्ट्रा 72, 50 और 18 में सेल हो रहे हैं। तो हमें 22 रुपये, 10 रुपये और 8 रुपये एक्स्ट्रा मिल रहे हैं, ए, बी और एक्स। लेकिन इस एक्स्ट्रा मनी को जनरेट करने के लिए आप एक्स्ट्रा खर्चा कितना कर रहे हैं? व्हाट इज द एक्स्ट्रा एक्सपेंडिचर यू आर इनकरिंग? 1,80,000 फॉर ए, and 1,80,000 when divided by 18,000 units. So we have seen 10 rupee per kg was the post separation cost. We have done this calculation also. For B, 1,50,000. So for B, we are incurring 15 rupee per kg extra. And for C, 1,08,000 divided by 54,000. So 2 rupees extra. Now see, incremental revenue is 22, 10, 8. Incremental expenditure is 10, 15 and 2. So A को further process करने में फायदा है. There is a benefit in further processing A because you're getting 12 rupees incremental profit. Here there is a loss, -5. Here there is a +6. Right? So it's better कि अगर हम B को further process ना करें. Right? So we will prepare one more statement or a decision making showing whether to further process the products or not. So we have done all the working for A. Incremental revenue is 22 and incremental cost is 10. So profit would be, additional profit would be 12 rupee per unit. B, incremental revenue was 10, incremental cost was 15, so it is -5. And for C, incremental revenue was 8, incremental cost was 2, so it was giving you +6. So our decision is A and, let's see, X, sorry. A and X should be further processed. And B should be sold as it is. So you have rather, after having processed B further, you have incurred a loss of 5 rupee per kg. And as you have sold 5,000 kgs, so 25,000 is loss. So had B sold B as it is, we would have got additional profit of 25. It would not have been 35, but it would have been 60,000 then. So our profit could have increased by another 25,000 if B is sold as it is, not after further processing. So this is all. If you have any question from this explanation, please ask. So this is a comprehensive question which talks about methods also, which talks about finding out the cost per kg for each product, which is a part of which is joint cost and a part of which is post-separation cost. Then it is also asking you to prepare a statement of profit when all the products are sold after further processing. Then it is asking you to make your calculations and to show what should be your decision, whether the product should be further processed or not. So the decision is A and X are giving us more benefit after further processing. So if we process them further, we are incurring a cost of just 2 rupees extra, whereas we are able to sell it for 8 rupees extra. So we will be getting 6 rupees per kg extra. In A also, if you are selling it right away, you are selling for 50. But if you are selling it after further processing, you are selling for 72. So you will be getting 22 rupees per kg extra. That's the incremental revenue. And how much does it cost to process further? So it is 180 divided by 18,000, just 10 rupees, right? However, in case of B, it could have sold here for 40, but you are processing it further and then selling it for 50. So you're getting 10 rupees extra. But the further processing costs are 15 rupee per kg. Therefore, B should not be processed further. Any more questions? You can paste it in the chat window if you have any doubt or question. Right? So it is as simple as this calculation. If I have produced something for 40,000 and I can sell it for 60,000. So my profit is 20,000. Now, if I can do some modification to this, so I add plus 5,000, which increases my selling price by 15,000. So then the cost would be 45 and sales value would be 75. My profit would be 30,000. So I should do this by incurring additional 5,000. If I can add a value of 5,000, but in the customer's eyes, it's equivalent to 15, he's ready to pay 15. Then I will get 10,000 incremental. This becomes incremental cost. This becomes incremental revenue. So as the incremental revenue is more than incremental cost, you will get additional 10,000, which you can see here. However, if on 40, if I had to add 5, and then I could have sold it for more than 60, but let's say only plus 2,000 would be what the customer is ready to pay to me now. So he's ready to pay only 62,000. So what has happened? I have incurred a cost of 5,000, which increased the value of the price of the product by 2,000. So incremental revenue is just 2,000, cost is 5,000. It's a loss of 3,000. My profit will go down by 3,000. It should be 17. 20,000 minus 3,000, 70. And you can see it, 45 and 62, what's the profit? 7. So you have to compare incremental revenue, what extra revenue you can generate, and subtract from this what extra cost you had incurred. And you would have got the answer. If this is positive, go ahead, it should be further processed. But if it is not positive, leave it here, should not go for further processing. Right? So as you are not putting any questions in the chat, I am assuming you have understood this. Let's move to one more question. Inorganic chemicals purchases salt and processes it into more refined products such as caustic soda, chlorine, and PVC. So there are three products, caustic soda, chlorine, and PVC. In the month of July, Inorganic Chemicals purchased salt for 40,000. This is the joint cost, 40,000. And there is a conversion cost of 60,000. So you must have been clear by now that you start working on material and you convert it into final product by employing on the raw material wages plus overheads. So conversion costs are wages plus overheads. So we already had material of 40 and wages and production overheads are 60. So your total joint costs here are 1 lakh. Right? So they were incurred up to the split off point, at which time two sellable products are produced, and then chlorine can be further processed into PVC. So it's not that you are incurring the joint cost till here 100,000, and you are not getting three products. You are only getting two products. The two products are caustic soda and chlorine. chlorine can be further processed into PVC. So physical unit, if you see how much caustic soda is produced, 1200 tons. How much chlorine is produced? 800 tons. But if this 800 tons of chlorine is further processed into PVC, then there is again a process loss and you will end having 500 tons, right? So I hope you've understood that you start with raw material and after some point you get 1200 of caustic soda and 800 of chlorine. But this chlorine is further processed. Caustic soda is not processed further. Only this is further processed. And this gives you 500 tons of PVC, right? And you also have the selling price. So you have the selling price of caustic soda and you have the selling price of PVC. You don't have the selling price of chlorine. So it is assumed here, maybe chlorine is not sellable as it is. And chlorine can only be sold after further processing, as we don't have the market price of the chlorine immediately. So we are going to spread this into caustic soda and PVC for the time being. Let's read the question further. So it's saying all our 800 tons of chlorine was further processed. And for this, you incurred an incremental cost of 20,000. And you got 500 tons of PVC. So post-separation cost is only for one product, and that one product is chlorine. So you incur 100,000. You get two products here, and this one is then further processed for 20,000, and you get 500 tons of PVC here from the 800 tons of chlorine. However, there is an active market for chlorine also. Okay, so they have processed it further, but it was possible that if you wanted to sell, you could have sold chlorine as it is as well. So inorganic chemicals could have sold all its July production at 75 per ton. Okay, so that means if you would have sold this entire 800 could have been sold for 75. So either you could sell chlorine 800 into 75 or you could sell PVC 500 into 200. So once again, you will appreciate that there is an incremental revenue. If you had sold chlorine, how much would have you got? 800 into 75. $60,000. And if you would have sold PVC, it would have been 500 into 200, 1 lakh. So you can sell it as it is for 60,000, or you could sell the PVC for 100,000. So what is the incremental revenue you are getting here? 40,000, right? You are able to generate 40,000 more by incurring how much extra? Post separation cost is 20,000. So it's not advisable to sell chlorine as it is. It is advisable to further process chlorine into PVC and then sell the PVC for 200 rupees per ton. So inorganic chemicals could have sold all its production for 75. So what are you required to do? One, show how joint cost of 100,000 would be apportioned between caustic soda and chlorine under each of the following methods. First is sales value at split off point. Second is physical unit method. And third is net realizable value. So in this question, specifically, you are asked to allocate the joint cost in the three methods: sales value at split off, physical unit, and estimated net realizable value. Let's start doing that first. Statement showing the allocation of joint cost between caustic soda and chlorine. One, market value at split off point. In the previous question, we have prepared our uh, statement horizontally. We can also prepare it vertically. So product is caustic soda and chlorine. Production in tons or output, 1,200 tons of caustic soda and chlorine was 800 tons. Selling price per ton, 50 rupee per ton and 75 per ton. Because first method is sales value at split off point. 50 and 75 sales value at split off point. $1,200 into 50, 60,000. 800 into 75, 60,000. Share in joint cost. So you will have working note here. The ratio of sales value at split point is 1:1. Okay. 60,000 ratio 60,000. So 1 lakh joint cost will be split in the ratio of 1:1. That is rupees 50,000 each. So this is the share in joint cost. If you are following the market value at split off point. Or you could have also done 60,000 divided by 1,20,000 into 1 lakh. Right? So this is the market value at split off point 60-60 since the ratio is equal. So the share in joint cost will be 50,000 each. The second method was physical measurement method. Once again, when you will prepare the statement in the similar fashion, you'll write statement showing allocation of joint cost using physical measurement method. You will write down the names of the product, caustic soda and chlorine, output 1,200 and 800. So once again, a working note, ratio of physical measure, three is to two. Therefore, share in joint cost. Three by five into 1 lakh. So share in joint cost will be 60,000 and 40,000. Okay. You can also add one more column here, ratio, 3:2. So if you use physical measurement, it is 60-40. But if you have used sales value at split off point, it is 40-40, 50-50. Now, estimated net realizable value. On the basis of estimated. Why we are saying it estimated? Like I said, if you work reverse from sales value, you should have profits, you should have selling expenses, everything. But because we don't know anything about profit, we don't know about selling expenses. So this is the best we can do. So it is the best estimate of the net realizable value. So sales value after split off, you have caustic soda and you have PVC being sold, which is a product of chlorine. So from fluorine, when you get PVC, sales value is for this, you are having 1200 into 50. So the sales value is 60,000. For this, you had 500 tons into 200 rupee per ton. So 100 lakh. Less profit, we don't know. Less selling expenses, we don't know. Less post separation cost. There is no post separation cost for caustic soda, but for this we have incurred 20,000. So net realizable value 60,000 and 1 lakh minus 20,000, 80,000. Now, if this total would have come out to be exactly 1 lakh, you could have said that the share in joint cost is, this is the joint cost itself. But because we had the joint cost as 100,000, not 140, so we'll divide the joint cost in the ratio of 60:80 or 6:8 or 3:4. So share in joint costs. Working note again, 60,000 divide by 1,40,000 into 1 lakh, or you can calculate the ratio as 3:4. So you can also take 1 lakh divided by 7 into 3. This comes out to be 42,857.14, ignoring the two decimals of 0.14. So for this, you write the balancing figure as 57,143. You can verify this also. 80,000 divided by 1,40,000 into 1 lakh. This is for caustic soda. And this is for chlorine or PVC here. So 57,142.85, but because we had to round off, 57,143. Right? So this is how you have allocated the joint cost amongst the three products, two products. If it was sales value at split off point, it was giving us 50-50. If it was physical unit method, it was giving us 60-40. But if it was estimated net realizable value, then it's giving us 42,858, 7 and 57,143. All the three methods will give you a different answer. Okay. Next is second part in this question says lifetime swimming pool products offers to purchase 800 tons of chlorine in August at 75 rupee per ton. So we also have an offer to sell chlorine as it is at 75 rupees. The same offer for lifetime swimming pool. This sale of chlorine would mean no PVC would be produced in August. So we are not going to produce PVC in August. We will just sell the chlorine as it is at rupees 75. Explain how the acceptance of this offer would affect the operating income. Now, if you look at the operating income, so you must prepare the statement of operating income existing. Caustic soda, PVC, sold for 60. I'm not writing the complete information here. If you want, you can write sales value in rupees and total. Total cost. So joint cost allocated in any method, the total will come out to be one only. And joint cost apportioned using sales value at split off point. Post separation cost. And second, this is also in rupees. Nil, 20,000. So total profit is 10,000 for caustic soda, 30,000 for PVC, and 160 minus 120. Total profit is of 40,000. So this is your profit product wise as well as in totality, your operating income presently. What would happen if you had accepted the proposal of lifetime swimming pool to accept the chlorine as it is? Your statement would have been again caustic soda and chlorine and total. So caustic soda would have been sold still for 60. However, 800 into 75. This would have also sold for 60. So your total sales value would have been 1,20,000. Less share in joint cost, 50,000, or whatever the method you follow to apportion the joint cost, physical measurement, sale value at split off point, or net realizable. But when sales value at split off point is given, generally it is one of the best measures. So subtract this. So your profit will be 10,000, 10,000, and 20,000 in totality because there is no post separation expense. Right? So how did it impact your operating income? The operating income was reduced by 20,000 if the offer of lifetime swimming pool is accepted. So that offer should not be accepted. Even if you have used any other method, this would be 60-40, then this would have given 0 and 20. But the total profit will definitely impacted by the same amount. Individually, when you use a different method of apportionment of joint cost, you can have different individual profits, but the overall profit will remain 20,000 only, right? I hope this is clear. If you have any questions, you can please paste it in the chat window. Pooja, any question? Karan, Akhila, anyone, any question? Meenu? Right. So you've understood so far how we allocate the joint cost into different products. One, case scenario. This is given in your study material. You can try to solve this. Let's first understand what is happening. So there is Pokemon Chocolates. It manufactures and distributes chocolate products. It purchases cocoa beans and processes them into two intermediate products. So what are you purchasing? Cocoa beans. That's your raw material. And then from cocoa beans, you end up getting a chocolate powder liquor base and a milk chocolate liquor base. So you get two products, chocolate powder and milk chocolate. Liquor here would mean to some extent from the liquid, not from the liquor. These two intermediate products, they become separately identifiable at a single split off point, and this is the ratio. When you process 500 pounds of cocoa beans, you end up getting 20 gallons of chocolate powder and 30 gallons of milk chocolate liquor. Okay, chocolate powder liquid and milk chocolate liquid, 20 and 30 gallons. This chocolate powder liquor base is further processed into chocolate powder. So this will give you chocolate powder. So this chocolate powder liquid will give you chocolate powder. And every 20 gallons of chocolate powder liquor base will give you 200 pounds of chocolate powder. So 10 times is the final product. Whereas the milk chocolate liquor base is further processed into milk chocolate. So this is further processed and this gives you milk chocolate. And for every 30 gallons of milk chocolate, you get 340 pounds of milk chocolate. Okay. So I hope that diagrammatically or this is the first thing you should do is to understand the question thoroughly. Okay. So what is happening? And if you will draw it in a diagrammatically form, it will be very good for you. 500 tons. This becomes split off points. You get liquid chocolate powder and liquid milk chocolate. So you get 20 gallons of this and you get 30 gallons of this. This is further processed. This will give you 200 pounds of chocolate powder. And this, when further processed, will give you 340 pounds of milk chocolate. So far, the question is talking about only this. So we have understood this entire concept thoroughly. Cocoa beans processed were not 500, but 7,500. So you can see proportionately what should happen then. This is 15 times. So you will have, what is the relation between 500 and 7,500? 15 times. So 20 into 15, you should be having 300 gallons of liquid chocolate and 15 into 30, 450 gallons of milk chocolate liquor. This should give you 3,000 pounds of chocolate powder. And this should give you, if 30 gives 450, 30 gives 340, what will 450 give? So this is 15 times. You can multiply 340 by 15. So when you have established a relation, you can simply use that fraction. So this should give you 100 pounds of milk powder, milk chocolate. Okay. What we did is we have proportionately established a relation. It's not 500 pounds which is processed, 7,500. So it's 15 times. Everything will become 15 times. All the figures will correspondingly become 15 times. Okay. Now let's look at the costs. Cocoa beans processed, 7,500. Cost of processing cocoa beans up to split off point, including purchase of beans, which means raw material cost inclusive, 7,12,500. And like we had calculated, what should be produced? 3,000 chocolate powder and milk chocolate should be 5,100 pounds. Entire output is sold, no closing stock. Selling price after post separation is mentioned, 190 and 237.50. So this cost up to here is 7,12,500. Okay. And chocolate powder is sold for 190. Milk is sold for 237.50. The October 2024 separable cost of processing chocolate powder, liquor into chocolate powder are 3,02,812.50. 3,02,812.50. 812.50. Three lakh 2,812.50. And the October 2024 separable cost of processing milk chocolate liquor base into milk chocolate is 6,23,437.50. So these are post-separation costs. Okay. Pokemon Full processes both of its intermediate products into chocolate powder and milk chocolate. Okay. So they are not keeping it like that. They are further processing the intermediate products. However, there's an active market for these intermediate products as well. So in October 2024, if Pokemon wanted, it could have sold the chocolate powder liquor base at 997.50 per gallon and the milk chocolate at 1235 a gallon. So this could have sold here at 997.50 per gallon and this could have sold at 1235 per gallon. Right? So this is the entire information which is present in this page of the slides, and this is completely pasted here, everything. Now what we are required to do, let's see what is the ask of the question. So it says, calculate how you will allocate the joint cost of 7,12,500 between the chocolate powder and milk chocolate liquor basis. Okay, chocolate powder and milk chocolate liquor basis under the following methods. 1. Sales value at split off point. 2. Physical measure. 3 NRV. And there is another method which we have not discussed, and this is the reason I have taken up this case study, so you can do the gross margin calculation also. So first let's do ABC, which we have understood so far. Sales value at split off point, physical measure, estimated net realizable value. I am showing you this. I'm giving you 2 minutes, 5 minutes. Try to complete this, and then I'll start working on this. Take 5 minutes. Try to do the question with this information completely pasted here. This becomes redundant now. Only relevant information is on the right of this line. This was only to calculate to the proportional calculations. So how will you allocate 7,12,500 amongst chocolate powder liquor base and milk powder liquor base using these three methods? So by now, I hope you have thought about it. Chocolate powder liquor base and milk chocolate liquor base. Output, it's in gallons. So this is 300 gallons. Selling price at split off point, 997.50. And this was how many gallons? 450 gallons. Sold at 1235 per gallon. So you see, this could have sold for 997.50 per gallon, and this could have sold for 1235. So 500 tons when produced gives you 20 gallons. So 7,500 tons would give you 20 into 15, 300 gallons and 450 gallons. Sales value, calculate this. Two lakh 99,250. 5,55,750. Total sales value is 8,55,000. Share in joint cost, 7,12,500. Working note, 2,99,250 divide by 5,55,750 into 7,12,500. So the share in joint cost comes out to be 249,375 for chocolate powder liquor base, and for milk chocolate liquor base, it comes out to be 4,63,125. And you will add the two, you will get the same figure, right? So this is the first part. Second, physical measurement. Which will be comparatively simple. The physical measurements are 300 gallons, chocolate powder, liquor base, and milk chocolate, liquor base, and 450 gallons of milk chocolate. So the ratio is 300 is to 450, or you can say 2 is to 3. So share in joint cost would be 2 by 5 into 7,12,500. Two lakh 85,000 and 4,27,500. 7,12,500. This is when you follow the physical measurement method. I'll take up the net realizable method here only. So when you have NRV, we take the sales value after split off. From that, we try to subtract the profit if it is known. We try to subtract the selling expenses if they are known. And we try to subtract the post-separation cost if it is known. And then what balance remains, if the total of that is equivalent to joint cost, then you get the share in joint cost. But if this total for all the products is more than joint cost or less than joint cost, then you get a ratio of share in joint. You have to divide the total joint cost in this ratio. So let's see what do we get here in this question. So we have either chocolate powder or milk chocolate, which is to be sold. This is quantity. So how much pounds of chocolate powdered wheat had? 3,000. And how much pound of milk chocolate we had? 5,100. Because 20 uh, gallons were giving us 200. So 30 gallons will give us 300 gallons will give us 3,000 pounds. And here 30 gallons were giving us 340. So 450 gallons will give us 450 into 340 divided by 30. So 5,100. And the selling price was also mentioned for the post separation. So if these are to be sold, this is to be sold for 190 and this is sold for 237.50. So sales value after split off, 5,70,000, 5,100 into 237.50, 12,11,250. But we have the post separation expenses, right? How much? 302,812.50 and 623,437.50. So less post separation expense. 302,812.50 and 623,437.50. So when you will subtract this, please ensure that you always keep filling the total column also. So this is 570 plus 12,11,250. So the total sales value is 17 lakh 81,250. Post separation costs are 3 lakh 2,812.50 plus 6 lakh 23,437.50. Post separation expenses are 9 lakh 26,250. So when you will subtract the post separation expenses from the total sales value, 17 lakh 81,250. So your total comes out to be 8 lakh 55,000. Now the joint cost was not 8 lakh 55,000. The joint costs were 7 lakh 12,500. So 5 lakh 70,000 minus 3 lakh 2,812.50. This is 2 lakh 67,187.50 and 12 lakh 11,250 minus 6 lakh 23,437.50. So this is 587,812.5, right? So this is the ratio of apportionment of joint cost, right? Ratio of apportionment of joint cost. So this divided by 8,55,000 multiplied by 7 lakh. So if you apportion it your joint cost in this ratio, the share in joint costs will come out to be 4,89,500. And for this 267187.5 divide by 8,55,000 multiplied by 7,12,500. So triple two 656.25. Now I'll round off to ensure that the total fits properly. 7,12,500 minus 4,89,500. This should give you 2,23,000. Let me check again. 267187.5 plus 587,812.5. The total is 855. Now 267,187.5 divided by 8,55,000. That's 0.3125 and 0.3125 into 7,12,500. So it is 226,656. So this may be something wrong. 587,812.5 divided by 8,55,000. It's 68.75% into 7,12,500. So percentage wise, okay. So it's 489,843, not 500. So if I'm keeping this 844 to ensure that the total, there is no problem of rounding off. So this was 843.75. So this is rounded off to 844. And this was 222,656.25. So I have ignored the 0.25. Okay. So you can see, yes, it's 844. Thank you, Pooja. So this is how you have allocated. Now you see there is a difference in the answers when we are using different methods. So when we use the sales value at split off point, the share in joint cost comes out to be 249,375. Let's talk about chocolate powder only. When we use the uh, net realizable value, we get 222,656. And when we use the physical measurement, it was 285. So in all three situations, we are getting different answers. Okay. Now let's look at the fourth method, which we have not done so far. So like I said, and you have also seen here, okay, we can take it up after a 10 minutes break if you want, right? So we can keep it a break of 10 minutes. Then after you come back, we will start with this. Okay. So your 10 minutes break starts now. All right, team. I hope everything is clear. Right. Thank you. So the next method we were talking about is gross margin, constant gross margin. So when I say gross margin, you can say it's the profit, GP, gross profit on sales, right? That's the gross margin. And if we look at the previous method, the NRV method, what did we see here? We saw that the total of the sales value was 17 lakh 81,000 something. The post separation costs were also 9 lakh something. So the joint cost comes out to be 8 lakh 50,000 some 55,000. But actually the joint costs were only 7 lakh 12,500. So why is this difference? It is indicative that there are something more else. So what is that something else? That something else is profit and selling expenses. Now, assuming that there are absolutely no selling expenses here, zero selling expenses. So why there is a difference between 855 and 712? That may be because of the profit element. So let's do the constant gross margin. And when I use the word constant here, it implies that I am going to get the same margins or same gross margin from both the products. So constant gross margin method, what we do is we find out the total sales value after split off, after further processing of the final products. I'll pick up the total sales value from the previous slide. It is 17 lakh 81,250. I'll just verify it again. 5 lakh 70,000 plus 12 lakh 11,250. So the total sales value is 70 lakh 81,250. Now let's subtract from this the total production cost, which will have pre-separation costs, 7 lakh 12,500. Post-separation cost, which is, I can pick it up from here, 3 lakh 2,812.50 and 623 437.50. The totals is 3 lakh 2,812.5 plus 6 lakh 23,437.5, 926,250. So your total manufacturing cost comes out to be 926,250 plus 7 lakh 12,500. So it's 16 lakh 38,750. Therefore, what is the gross margin? It's 142,500. 1,42,500. So I'll calculate the gross margin percentage as the next step. 1,42,500 on 17 lakhs 81,250. this comes out to be 8%. So I assume that for whatever my products are, A and B both, they have the same gross margin. So let's sell chocolate powder and milk chocolate. Once again, writing down their sales value. $570 and 1211, $250. Now I have one more element, which is profit. So less profit or gross margin, which is what? At the rate of 8%. So 5,70,000 into 8%. The gross margin in this one is 45,600. And the gross margin in the milk chocolate is 1211 250 into 8%. 96,900, which is again a total of 1,42,500. So when you subtract the gross margin, you have total cost. $5,24,400 and 12,11,250 minus 96,900. So it's 11,14,350. So 16,38,750. Now you will subtract post separation cost. This was 302,812.50. And this was, I think, 623,437.50. And the total of joint cost post separation was 9,26,250. Now, what will happen in this case is the difference should be exactly your joint costs. 1638,750 minus 926,250 will give you the joint cost 7,12,500. So automatically, the balancing figure here from total cost, when you subtract the post separation cost, what you get is share in joint cost. And again, this will be a little different answer from the previous one. So 524,400 minus 3,02,812.5. I can round it off, though both will give me the answer in 0.50, but let me round it off to the lower number, and the next one I'll round off to the higher number. Or you can keep it at 0.5 also, but generally we should not leave the final answer in decimals. 4,90,000. So see, this time again you get an answer for share in joint cost, but these answers are different from the previous one. Okay. So we had done the question in different methods. Sales value at split of point. The answers were 299250 and 555750. Physical measurement 285 and 427. NRV, it was 222656 and 489. So this one, all the three are giving us different answers. And then we did the gross margin, which is again giving us another answer, 221,587 and 490,953. And the gross margin comes out to be 8%, right? Further, what is being asked? So we have done constant gross margin percentage. Turns out to be, we have allocated the joint cost in the ratio after deducting the 8% gross margin from the final sales value. Now, the second part is asking us, what is the gross margin percentage of the chocolate powder and milk chocolate liquor bases under each of the methods in requirements? So what gross margin percentage are you getting for chocolate powder and milk chocolate liquor bases under each of the different methods? So we have followed different methods. You are getting different answers. So what you will do is you will take the final sales value, and from that you will subtract post separation cost and share in joint cost that you receive from each of the methods, and then find out what is your gross margin percentage. So that will give you a different answer. However, your answer would be 8% only. But under this method, you get a different answer. Under this method, you get a different answer. You can see also under the first method, it was 299, almost 3 lakh. Under the second method, it is 285. So when the cost will increase, they will not be 222 or something else. When they will be more than, under this method, gross margin, the share in cost is only 221. So when your share in joint cost will increase under physical method or under sales value at split off point, obviously your gross margin will be less for chocolate powder and higher for milk chocolate, right? If you want to calculate, I can calculate for one of it. First method, sales value at split off point. So when you have the sales value at split off point, let's say this is 300 into 997. So sales value is 299,920. I'll do it here under this method only. 299,250 is the sales value. Minus share in joint cost is 249,375. Therefore, profit or margin is the difference between the two. Margin is 49,875. You can calculate it here also. Margin 49,875. And here the margin is 555,750 minus 463,125. So here the margin is 92,625. So what is the margin percentage? Into 625 divided by 555,750. It is 16.66% for this. And for the first product, 49,875 divided by 299. This will also give you the same answer actually, 16.67. So if you are selling the product at split off point, you're getting a margin of 16.67. Whereas if you are further processing it, you are getting a margin of 8%. In the second method, if the joint costs are 285 and 427. So from here also, sales value at split off point would be, again, 299,250 and 555,750. So now 299,250 minus 285,000. Here you are getting a profit of only 14,250, which is 4.76% only. And for the second product, 427,500 minus 555,750. Here the profit is 1,28,250, which is 23%. So your profit margins for the milk chocolate powder liquor base and milk chocolate liquor base will be different under physical measurement, NRV, or under the way the joint costs are different. They will be same in the sales value at split off because that's the same ratio in which you are dividing the joint costs. So kind of you're taking the same margin, 16.67. But in physical measurement, you get 4.76 and 23.09. If you had used NRV, then the joint cost share is coming lower. So here the margin for chocolate powder liquor base would be higher, and for milk chocolate it will be lower because it is going to bear higher cost from the joint cost. Okay. So this is your second part of the question. What is the gross margin for chocolate powder and milk chocolate liquor bases under each of the methods? So you will take split off, and from this you will subtract the joint cost, share in joint cost for both the products under different methods, and you will find out different margins and different margins percentage. Next is, could Bookman have increased its operating income by a change in its decision to fully process both of its intermediate products? Show your computation. So once again, the same concept, incremental revenue and incremental cost. So we have the complete information here. So I'm using this slide only to do this calculation. Let's do it first for chocolate powder. So if chocolate powder is further processed, I'm getting 3,000 into 190. 5,70,000 after further processing. Otherwise, I would have got 300 into 997.5. 299, 250. So incremental revenue here is 2,70,750. What is the incremental cost? 3,02,812.50. So by increasing the cost of incurring about 3,02,812.50, you are increasing your revenue only by 2,70,750. So the net outcome is negative. Net outcome is a minus of 32,062.5. So we should not process chocolate powder liquor base into chocolate powder. So because it is giving us an incremental revenue of 2,70,750, whereas the cost incurred is higher. So by further processing it, we are having a cost of 32,062. The profits are decreasing by this much amount. Let's do it for milk chocolate liquor base. So if you process it further, you get 5,100 into 237.5. So you end up getting a revenue of 12,11,250. Otherwise, you would have got 450 multiplied by 1235. So if you had not processed it further, you would have got 555,750 still. Okay, 5,55,750. So what extra are you getting? You are getting an incremental revenue of 6,55,500. Whereas what is the incremental cost? 6,23,437.5. So you would see the by 32,062 or 63. Same. So when we process chocolate powder further, minus 32,062. When we process this further, plus 32,062. Because but here you are getting extra, here you're getting less. Now you see why they have given the joint costs in fractions or in this amount, not an exact figure like 3,05,000 or 3,02,000. It's a very figure which is in decimals because the profits are compensated. So your overall profit is going to remain same in totality, whether you process it further or not. However, so you can see here, 2,99,250 plus 555, your total sales value would have been 8,55,000. And from 8,55,000, if you subtract 7,12,500, the joint cost, your profits would be 142,500. So if you process further, do not process further, your profits are 142,500. And if you process further, then also your profits are 142,500. So overall position says whether process or not, you end up getting 1,42,500, right? But individually, if you look at the two operations or the two products, the chocolate powder gives you a loss of minus 32,000 something. And exactly same profit you get, let's say 603, by processing milk chocolate further. So your overall profit remains same. But if you decide to sell chocolate powder as it is, okay, if you sell chocolate powder as it is, that is 300 into 937.5. 997.5, sorry. 300 into 997.5. So you get 299, 250. This you sell in liquor base, and milk powder you process, milk chocolate liquor you process to form milk chocolate, which you sell at 12,11,250. So your total sales value will be 15,10,500. And your costs would be joint cost 7,12,500 plus post separation cost only of milk chocolate, which is 6,23,437.50. Now you look at your profits, joint cost and post separation cost. you would have increased your profits 4,562.5 or 63. So one is giving you minus 32, other is giving you plus 32. They are compensating. So if you do not process this further, you save here plus 32, right? And that plus 32 other is coming. So your profits 1,42,500 will increase by 32,000 something. So you get 174,562, 6062. So this is our final solution, and that we should not process chocolate powder liquor base further. We should sell it as it is at the split off point, but we should process the milk chocolate liquor base to formulate milk chocolate by incurring an additional cost of 6,23,437, so that our total overall profits are enhanced from 142,500 to 174,562. But you will have to present a statement of incremental revenue and incremental cost. And then you take your decision individually which product should be processed further and which should be left as it is. Okay, right? So this was one question which is also there in your study material as case scenario. Try to do this. However, these two parts are not there. You have to calculate only the first, second, third, fourth part, and finally the joint cost and the gross margin, right? Team, now I would like to talk about byproducts after this. I have a blank sheet. I will take this. If you have any doubts from this question, please put it in the chat window. I'll resolve. Otherwise, this is all about joint and byproducts. Joint products, sorry. I'll explain the byproducts just now. So hope how you've understood what are joint products. And the whole question is how you will allocate the cost of joint amongst the various products. So the cost which is incurred up to the split off point, that must be allocated amongst the joint products. So there are different methods, mainly physical measurement, net realizable value, and they can also be technical estimates, particularly when there is the captive consumption, like you are consuming the products in yourself only for further processing. And there is also no ready-made market available, or you can't find the market value of similar products or services. Then the products, in that case, you generally use the technical estimates. And then besides these three main methods like market value at split off point, market value after further processing, constant gross margin approach, and the contribution margin approach, and average unit method. So this is how you can allocate the joint cost amongst various products. And basis this calculations, you can also take an important decision as joint product should be further processed and which joint product should not be further processed and sold at split off point only if there is a market for it. For this, you have to evaluate whether incremental revenue is more than incremental cost. If yes, go ahead, process it further and then sell it. If no, then you should sell the product at split off point only and should not go for further processing. The next concept is byproducts. So byproducts here would mean that they would generally have not very significant value. So maybe they are not very significant, they are of lesser value. For example, when you have sugar industry, you produce from sugarcane sugar as well as molasses. So molasses do not have much value. Similarly, if you use milk, you produce butter, you produce curd. They are both significant. But if you take out the cream from the butter and you produce the uh, churn the cream and produce butter and you get a buttermilk, the buttermilk is a byproduct. It is not very significant because the entire content will be there in the butter. So when you talk about byproducts, they have comparatively less significant value. However, they can also be further processed. Some byproducts further processed. So they are not waste. They can be further processed and they can also have a sellable value, right? So how do you account for byproducts? So we don't allocate the cost amongst main product and byproduct, just like we did it in the joint product. What we do is sometimes maybe the byproduct has zero value, nothing, going to get you nothing. In that case, we don't consider byproduct. We cost byproduct units to the main product only. Like we have done in the process costing, like normal loss units, the cost of normal loss units is to be borne by the main good units. Then we talk about maybe the byproduct has sellable value. So if the byproduct has some sellable value, sales value, whatever the sales value is, we deduct it from the main product. So if I prepare an account, and if it is an account of joint product X and joint product Y, the accounts will go something like this. It will have share in joint cost, then it will have post separation cost, then maybe it has some sales value, and whatever is left here is your profit. If selling expenses are also given, you can deduct, you can debit them also. Similarly for joint product Y, share in joint product, share in joint cost, separation cost, selling expenses if given, and balancing would be your profit if sales of product is given by bank. However, if it is a byproduct, what we do is we prepare a account which is main product account. So we have to joint cost completely. All the joint costs will be debited here, and to post separation cost if there anything. Now, if byproduct has absolutely no value, we will not credit anything. But if byproduct have some sales value, so we credit it on the credit side. So this reduces the cost of the main product by the sale of byproduct, and whatever the difference is, that will give you the profit. So you simply credit it, right? Sometimes when you know that byproduct is sold, but it has some selling expenses, some profit. So again, you can get back to the cost. So sales of byproduct minus profit, if you are aware of what is the profit on sale of byproduct, minus selling expenses, if you are aware of, if you have information of what is the selling expenses incurred to sell the byproduct, and if there is some post separation cost on byproduct that you are aware of, all that you can separate, and that portion, whatever remains, can be credited by cost of byproduct, right? But we don't prepare share in cost and joint cost of main product. This is not what we don't do. Okay. So I'll take up some MCQs from your ICAI material and let's discuss them. I hope you can see the material here, right? So let's take up the objective type questions first. You can type your answers in the chat window. We'll take up one by one. In sugar manufacturing industries, okay, by chance, same example. Molasses is also produced along with sugar. Molasses may be smaller value as compared with the value of sugar. Therefore, this is known as, the answer would be, please type in the chat windows. B. Yeah. So molasses are byproduct. Method of apportioning joint cost on the basis of output of each joint product at the point of split off. Method of apportioning joint costs on the basis of, the word used is output, on the basis of output. So what is this method? How much is the output? Method of apportioning joint cost on the basis of output. Yes. No, Pooja, it's B again. Physical unit method. Marginal cost or contribution method will come only when you have information about variable cost and the fixed cost. So first you subtract the variable cost and you get the contribution margin. From the sales value, subtract the variable cost and get the contribution margin, and then allocate the fixed cost in the ratio of contribution margin. Right? So when you are apportioning joint cost on the basis of output of each joint product, that is physical unit method. Third, in the net realizable value method for apportioning joint cost over joint products, the basis of apportionment would be, in the net realizable value method, when you are apportioning the joint cost over the joint products, what is the basis? What is it we do? We take the sales value after further processing. Then we subtract profit if we know about it. We subtract selling expense if we know about it. But if we don't know about it, we only subtract further processing cost, post-separation cost. B and C. Why B and C? Both. Give me one answer. So it will be C. Sales value of each joint product minus further processing cost of individual product. C is the answer. Net realizable value, selling price is multiplied by units sold of each of the joint products. So first selling price is multiplied by units sold of each of the joint products. That's there. But sales value we have to take after further processing. And then from that, we have to subtract further processing cost of individual products. Why I will not go by B here? Maybe you can take B and C both. But B, I will not go because there is slight ambiguity here, because if he's saying sold at joint products, so we are not selling the joint products as it is. Maybe we are selling the joint products after further processing. So that because of that reason, I will not take the sale value at the split off point. Because if I take the sales value at split off point, there is no point of further deducting the further processing cost. Fourth, the main purpose of accounting of joint product and byproduct is to, yes, main purpose. Why opportunity cost? Remember, we have done all the questions. So we have prepared a statement of allocation joint cost amongst various products, right? We have allocated the joint cost amongst various products. And after that, sometimes what we have done, we have also prepared a statement of profit individually and overall. So how does it help? It helps us in determining profit or loss on each product individually also. Yes or no? I'm not getting the right answer for the fourth. Think about it once again. C is the right answer. Yeah, Pawan, good. That what is the main purpose? So that we can actually find out which particular product is actually giving us what profit. And basis that only you are taking a decision whether we should further process it or not. So for some products, you are saying we should not further process it. And for some products, you are saying we should further process it and then sell. So what's the ultimate objective of any business? That is to earn profits. So when you are allocating the joint cost to the various products and byproducts, you are trying to find out what is the individual profit from each of the product. So in determining that, you will be able to also take a better decision as to whether we should further process and then sell the product, or we should sell it as it is. Next, under net realizable value method, okay, NRV. NRV is sales after further processing minus profit minus selling minus post separation, whatever information you have. So under net realizable value method of apportioning joint products, selling and distribution costs is what do you do to the selling and distribution costs? Right, Pooja. It is deducted from sales value. It cannot be deducted from further processing cost. It is deducted from sales value. So if you have information about what the selling and distribution costs are, good, Suharya, Fatima, good. Deducted from sales value. C is the right answer. Which of the following is a co-product? Now we talked about joint product, we talked about byproduct. What is co-product? Maybe they are similar type of products. Maybe they are processed in different production lines. So if a factory is producing seeds of one category, another seeds of another category, both the seeds are processed by taking different raw material, but they are both seeds. So they both may be a co-product, product manufactured in the same factory together, but maybe they are undergoing say different processes. Maybe they are produced into different departments altogether. So that's so which of this is a co-product? Diesel and petrol? They are byproducts or joint? They are joints. Diesel and petrol both are different. Both of them are produced when you start processing crude oil. So after a point, crude oil gets converted into diesel, petrol, kerosene, lubricants, etc. So diesel and petrol both being very significant, they are joint products. They are not co-products. Edible oils and oil cakes. So once again, whatever the residue is left after you prepare the edible oils, that's a byproduct. Oil cakes are byproduct. Have tried making ghee in your homes using butter? So you end up getting a lot of ghee from the butter, but then in the end, whatever the residue is, it's negligible value. So similarly in the oil processing industry, edible oils and then oil cakes. So oil cakes are byproducts, not co-products. Curd and butter in dairy process. Both are again significant. Curd and butter both have sellable value, good sellable value. Both are significant. So curd and butter are again not byproduct, they are joint products. Mustard oil and sunflower oil. So there is an oil processing company. This is a co-product. Why? Because mustard oil is prepared by processing mustard seeds, and sunflower is prepared by processing sunflower. So D is the answer. I think so. Pawan have given the right answer. Good. No, Pooja, not A. Diesel and petrol are joint products. Edible oil and oil cakes are byproducts. Curd and butter are joint products. Mustard oil and sunflower oil are co-products. The best answer is this here. Okay. Byproduct. So I think this will be simple. I think same examples are there. So we have discussed each. So what's the answer for the seventh? Byproduct. Quickly. Right. Getting one answer. Yes, Sohera, good. B. I hope I'm pronouncing your name correctly. Which of the following method can be used when the joint products are of unequal quantity and used for captive consumption? Thank you. So I think by chance I discussed this one also. When you are using a product, so main methods were net realizable, physical measurement, and technical estimates. So technical estimates comes into picture when you don't generally have the market value. So you don't have the market value at the split off point. You don't have the net realizable value also of the final sales value of the products after split off. So what do you have? Physical units or technical estimates. But why physical units are not relevant? Because joint products are of unequal quantity. Remember, we discussed the question where we had ABX and the output of A, B, and X were 18,000 kgs, 10,000 kgs, and 54,000 kgs. So that's why their physical unit method was not appropriate. Technical estimates would have been the best method. Okay. Then which of the following statement is not correct in relation to co-products? So co-products may also have joint products. Co-products may have byproducts. C would be the wrong answer. Right answer, I mean. C is not correct as far as co-products are concerned. So one co-products can have joint products. Why can't co-products have byproducts? They can have byproducts also. Next, 10th, you will tell me the answer. Captive consumption. Okay, if I am making something and I'm selling it in the market, uh, let's say there is a product A. When you process it, you make B, and then B can further be used to produce product C. Or we have just done a question where caustic soda was prepared, then chlorine was prepared, and then chlorine was further used to prepare PVC. So if I I had the option to sell chlorine in the market, and the market price of the chlorine was also available at split off point. Let's see if I don't sell any of my output in the market and I use it further as my raw material, like we have done in the process costing. Process one output goes to process two as raw material. Process two's output goes to process three as raw material. So you are not selling it outside. You are using it yourself. So when one process is over, the output of that, the finished product of that is not sold, but used as captive consumption in your second process. So captive consumption means you're not going to sell the output in the market, you are using it within your industry. So there is a vertical integration. Whatever was raw material you were procuring from outside, you start manufacturing that. So you start manufacturing your raw material, then you're not selling it outside to someone, you are captively using it within your own organization or entity to produce further finished products. So that is captive consumption, right? I hope it is clear. Okay, great. Thank you. Okay, when a byproduct does not have any realizable value, the cost of byproduct is no, Pooja. Why are you ignoring it? The cost, ignoring in the sense we are not writing it on the credit side. So when you are not writing it on the credit side of the account of the main product account, indirectly the main product is bearing that cost. By crediting it, you are going to remove the cost, but you have not done anything. So when you're preparing the account, you are ignoring it. So ignoring it means you are not writing anything on the credit, which means all the cost is to be borne by the main product, right? So byproduct cost is borne by the good units. Okay, 11th is to be done. Practical question. Please find out the answer and let me know what the answer is. SG Limited manufactures two products. The two products developed are MS and CB. Standard production has a joint cost of 100,000. And then you have 60,000 units of MS and 90,000 units of CB. MS sells for 200 per unit, CB sells for 450 per unit. Assuming no further processing cost is done after the split off point, what joint cost would you allocate to CB? Okay, CB, when you are doing a physical quantity allocation. Physical quantity. What is the answer? Now, if you look at this question, how much is the joint cost? 100,000, right? And all three answers are beyond 100,000. So your first answer is the right answer. If you look at it smartly, if you want to save your time in the exam. हाँ, मीनू आपको दिखाई नहीं दे रहा या समझ नहीं आ रहा या आवाज नहीं आ रही बैंडविड्थ लो दिखा रहा है others is it comfortable all of you yeah A is the right answer however we will not go by that method evident answer A we can look at this 60,000 units of MS 90,000 units of CB so what is the ratio 60 is to 90 2 is to 3 so when you will allocate 100,000 in the ratio of 2 is to 3 so the 3 will go to CB, which is 60,000. 3 parts. 1 lakh divided by 5 into 3, 60,000. Good. A is the correct answer. Next again is the calculation. Quickly do this. K company manufactures 2 hair care lotions, Livy and Silly, out of a joint process. Joint cost 6 lakh 30,000. And you generate 1 lakh 80,000 gallons of Livy and 1 lakh 20,000 gallons of Silly. So you have two products, Livy and Silly, 180 and 120. Physical measurement is 3:2. Livy sells for 240, Silly sells for 390. So you will have 180 into 240 and 120 into 390. But there is additional processing cost beyond the split off, which is 140 and 90. Now you have to allocate the joint cost of each production run on a physical quantity basis. So when you're doing on physical quantity, it is 3:2. Livy will have 3 parts, Silly will have 2 parts. So 3 by 5 into 630. 378 should be the answer. Check it out. Last, for the purpose of allocating joint cost to joint product, sales price at point of sale reduced by cost to complete after split off is assumed to be equal to what? You have taken the joint cost, you have taken the sales price after the point of sale, and you have subtracted the post separation cost from this. So what do we assume? That we have got the sales value at split off point. So net sales value at split off point, right? All right, team. I hope you've understood very well what is the joint and byproducts. So it's a very small and easy chapter, and we have taken up all the types of questions also in this. So how you treat byproducts, what are the different ways in which you allocate the main products and byproducts, right? So I'm sure you will be able to manage all the questions and will be able to complete to practice a lot. It's very important to get a lot of practice so that you are not struck in your exam. It's important that you write it with your own hands. Don't just read things. Okay. All the best to all of you. So this was all about joint and byproducts. Thank you so much. and all the best for your exams. Thank you. We can end the session.